So this is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle. So now we're in the phase where we need to pay the interest on the debts from the pandemic in 2024, 2025. Those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So the conclusion of that is there is only one outcome to everything, which is more cowbell.
By all early indications, 2024 is going to be a pivotal year for Bitcoin and the entire cryptocurrency industry. To begin with, 2024 is the year of another Bitcoin halving, an event that has in previous cycles preceded significant price gains for the leading crypto asset. In addition, the industry is gearing up for a massive influx of institutional investors, which begins with the approval of a spot Bitcoin exchange-traded fund. But the most bullish news going into 2024, according to Real Vision founder Raoul, is the end of the Fed's quantitative tightening and the beginning of a massive macro and crypto summer. During a recent interview with Overpriced JPEGs, Powell outlines his bullish predictions for crypto and the overall United States economy. According to the renowned macro analyst and prominent investor, all roads lead to more cowbell for the U.S. government next year. The Federal Reserve will be forced to either cut rates and QT or announce something similar to Japan's yield curve control, which also means more liquidity and massive price gains for the cryptocurrency industry. Powell has some extremely bullish and insightful outlook for crypto and macro in 2024. So ensure you watch, share, and like this video so you don't miss any important details. Thanks and enjoy.
I think the NASDAQ finishes this year at all-time highs. I think the S&P gets to all-time highs. So Q4 for me is the weaker period. That's when the recession comes in. So that's when we've already heard today, really, all the Fed were out saying, we've done enough. Bond market's gone too far. The bond market's overpricing this. Things like Janet Yellen saying today, really interesting comment. She said, well, when we think about it, financing the debt is going to be about 1% of GDP for the next 10 years. Well, if the government's 100% of GDP in debt, she's basically saying interest rates have to be 1%, which is part of this everything code thesis I've had. So what I'm seeing is liquidity starting to pick up. I think they will stop quantitative tightening this year. And then it's a bit complicated here, but the Treasury have been issuing new stuff. So that's the TGA build, but that probably slows down. But the reverse repo, which is the other part of the liquidity stuff, start draining. And that probably pushes liquidity. If they take QT out, it just means liquidity rises. So generally speaking, crypto is the multiplier. So if I look at the NASDAQ's up 38%, Bitcoin's up 70. So if the NASDAQ finishes the year up 48% or something like that, which would be a hell of a year for the NASDAQ, well, Bitcoin should finish up 100% plus. So this is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic in 2024, 2025. Those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So I went back and I think I was the first person or the only person to show that all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. So nobody's paying interest, even though interest rates went up. They don't pay them. They pay them for this period. When it comes to actually pay the interest, they stuff it on the central bank balance sheet. So nobody can afford to because the government is 100% of GDP in debt, just over that. And if interest rates are at 5% and economic growth's at 2%, well, there's 3% difference because GDP growth is all of the income for the economy. Well, if that's not enough to pay the interest alone on the government debt, how the hell are you going to pay the private debts, which is 120% of GDP? These are the maths that form part of that everything code thesis, He's like, there is no way they can have interest payments here because what's going on today is they have to keep issuing more bonds and more bonds and more bonds.
To pay the interest from
the previous ones. So they can't do it. So the conclusion of that is there is only one outcome to everything, which is more cowbell. They either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising, so then they have the cover to cut interest rates.
Okay.
And stimulate. Election year, always stimulus. So all roads lead to more cowbell.
If the Fed does end its ongoing tightening, cuts rates, or even resumes quantitative easing, what is the guarantee that that will impact crypto asset prices? According to Powell, this has been the plan all along. It was Satoshi's plan all along to have the halving cycle coincide with the global 3.5 to 5 year macro cycles. During the midpoint of these macro cycles, federal governments have to service their massive debts, which means maximum liquidity for assets. But only two assets will outperform the level of currency debasement, Hal explains. Here are more clips from the interview.
It's the point being is you debase the currency, all assets rise because you're optically debasing, which is why the Argentinian stock market goes up in a straight line until you put it in dollar terms and it's actually gone down 90%.
Oh.
That's debasement of currency.
Right.
Venezuelan stock market's the same. Right. All of these, Iranian stock market, they're all the same thing. Why crypto outperforms is really simple. It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. The S&P basically just about offsets debasement plus dividends. Real estate doesn't offset it. Gold doesn't offset it. So what I started doing was dividing all assets by the Federal Reserve balance sheet as a rough way of looking at it. And you get a really different picture. The S&P has gone sideways forever, which is why people who invest in their 401k in the S&P passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it. I've written a lot and thought a lot about this. And in fact, I've done a documentary on this. So the millennial cohort in their 30s did what they were told, which was 401ks. That massive cohort has completely disrupted how assets are priced. So index funds go up versus all active investments, which has destroyed the hedge fund industry, the mutual fund industry, everything, because millennials are doing exactly what they're told.
Put the money in a Vanguard fund.
I mean, they're good. You know, they're like a good badge to do the right thing, and you know that's how the system was generated for them, and so they've done that. But what happened in 2020 was the same that I saw with the Occupy Wall Street movement and the indignados in Spain when I was there. Is like the pandemic hits, and they're like, we've been doing what we're told, but we can't afford anything. We're in debt, house prices go up, we're not getting any richer, and we're all doing two jobs. Yeah. So what the hell are we supposed to do?
Right.
So they took a rational approach. The media, and it really annoys me, the media scoffed at them, as did Wall Street, to say they became gamblers. But they didn't. Well, they did, but what they did was use their discretionary income, because they were doing the 401ks and they were doing all the right things, but they took discretionary income and said, we need something with a high risk reward.
Right.
And it was actually a very valid thing. So the two assets became crypto and technology options. So it's the rise of Robinhood and the rise of Coinbase. And I've gone down the rabbit hole on all of this. So to put it in perspective, online brokerages, so the kind of cognoscenti of people who trade kind of global macro, they use interactive brokers. Interactive brokers have 5 million users, 300,000 monthly actives.
Okay.
It's tiny.
Compare that to?
Compare that to Fidelity, TD Ameritrade, and Schwab. Between 2 and 4 million monthly active users. They've got these vast number of brokerage accounts. That's baby boomers and their kind of mutual fund stuff. Robinhood has 24 million accounts, of which 12 million are active.
monthly?
That's 4 times the size. It's all of the rest of the industry added together. Coinbase is 108 million accounts, of which currently, right, we know on-chain activity is super, super low.
Right.
And that's 9 million. So I was at Coinbase yesterday and we were talking this through. I'm like, if we normalize crypto volumes, Coinbase will have 30 to 40 million active accounts.
In other news, Rich Dad Poor Dad author Robert Kiyosaki has unveiled his latest price predictions for Bitcoin, gold, and silver. In one of his most recent posts on social media platform X, Kiyosaki notes that Bitcoin is testing $30,000 and the next stop is $135,000. On gold and silver, Kiyosaki writes, gold will soon break through $2,100 and then take off. You'll wish you had bought gold below $2,000. Next stop is gold $3,700. Kiyosaki also noted that he expects silver to move from the current price of $23 per ounce to $68. Savers of fake dollars fucked up, he added. Please tell your friends to wake up. Kiyosaki has been known to call the US dollar and other fiat currencies fake money, which is not a stretch considering how these currencies are constantly printed out of thin air. If Powell's predictions are correct, the rate of debasement of the dollar is about to become even worse. The dollar, which has already lost most of its value, is about to lose much more. Please share your thoughts on Raoul Pal's outlook and Robert Kiyosaki's price predictions in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.